Welcome traders, and the reason why I'm showing you this picture of this escalator because I think it helps visualize what's actually going on in these markets. In the US we have rates potentially, although it's by no means certainly, about to rise. There is an assumption in the markets here, or at least a heavy bias to the upside, that on the 16th the US will raise rates. So that's 10 days from now. And in the meantime, on Thursday we had the ECB extending quantitative easing and reducing the deposit rates to try and stimulate the economy. So we've got US over here and the Eurozone over here. So this gap is created, and what does that mean for the markets? Well, that means, I think, longer term, I think we've seen quantitative easing do well. If they've got a weak euro over here and a strong dollar over here, so Europeans are able to sell goods and services to the US at a cheaper rate. So over a period of time, I would expect the euro markets to hold, and if this starts to work, then to push higher. In the meantime, the US economy is recovering well. We've got decent incremental rise in the job rates, and that's why the dollar has been benefiting from a very weak interest rate for quite some years now. This is potentially the first time, I think it's 10 years, that the US is going to see a rate rise. So let's just go to the charts and see what the impact on the market is. But generally, I think we're starting to see some good money flowing into European equity markets. We saw a big push up on Friday, but does that mean the US can continue? Well, let's now switch to the markets and get down to business. Okay, so here we have the Dow on the daily chart, and you can see the actual price action over the last couple of weeks has been difficult to trade. We saw after this very weak wishy-washy performance last summer, we saw gradually selling, and then the capitulation, and then of course we saw eventually this support level holding down here. So we breached it, closed above it, drifted back to retest it in September, late September, and then we've seen these pushes higher. But we've got to the stage now where, in terms of let's just look at purely simple fibs. What's the fibs telling me? Well, the fibs is telling me there is a bullish bias, because simply from the fact that this is a sell zone and we're closed above it. But it doesn't take much of a genius to work out that that is a shed load of resistance. So what do I think is going to happen? I think we could continue higher, a little bit higher, into this area here, potentially just over 18,000, and then sell. But keep closing above this area here. We'll close and hold above that area there, and sorry, I've confused that. Let me just clarify that. But certainly close above last week's highs, last week's resistance, and of course, you've got to be a buyer. So short term, I would look to see if the area that 700, 730 area gets bought on Monday. So look for gap fills, look for the open range, and so on, and let's just see if that holds and if it's got the potential to move higher. And we've had a somewhat difficult couple of weeks, so I don't think it's going to get easier into Monday unless we see a forceful move at certainly the reversal time. Data were quite light on data, so it was a really hectic week last week. European confidence levels on Monday morning 9:30. We've got Mr. Carney speaking at 3. Very little US data. And then on Monday we have UK manufacturing. In the afternoon we've got UK GDP. So it's pretty quiet. Wednesday we've got UK rates and New Zealand rates. So Wednesday is a big day for forex. And on Thursday we've got it's UK rates on Thursday. It's New Zealand rates on Wednesday, late in the day, hour before the US closes. UK rates on Thursday midday, and then US retail jobs on Friday. So pretty quiet. Not a lot to get excited about, certainly from the US perspective. So I'm just concerned that we may just drift until we get into the 16th, and then we'll see some action at that stage. So it's a pretty tight box at the moment, from 17,160 to 17,900. Alright, so we're in an apex and could go either way. So let's look across the other indices. DAX. So we had a lot of selling pressure into last week and then some buying at the end of the week. What do I think is going to happen? I think I'd be inclined to watch for some resistance up there just around the 11,000 mark. So I think we could see a push into 11,000, close higher than that, bullish, start failing there, then look for that to roll over. FTSE, let's just rattle through this as quick as I can. FTSE is a tougher call. Major area of resistance that we sold into on Wednesday and Thursday. Just closed to the underside of that trend line on the Friday. So I think a little peek into 63.20 and that could roll over. Unless, of course, we close up there on Monday. So that's what I'm looking for on the indices. Yeah, it's tight ranges, particularly on the US markets. Will the US markets take real heart from those nice job numbers and continue higher? Certainly the false will move up on Friday would suggest that may happen, but it is just so heavily congested above. It's going to take a lot of push to get through that, and we haven't got any major data until US retail sales and consumer confidence on Friday, which on the basis that the US is a service consumer-based economy means we might end up drifting around, pushing around in a very small area, that apex, until the second half of the week. So just be aware of that. Right, moving on. Euro, US. So we're holding this support level here. So might get a little drift lower. I think I'm looking to sell at a high level, potentially 110, 112. This sort of area coming into closer to the 200 EMA. Purely from the basis that we had a very, very nice push on Friday, sideways on, push on Thursday, sideways on Friday. So I think we may drift a little lower, find some buyers, and then push up into that resistance area. But it is tough. Like I said to you last time we had a big push up, we drifted sideways for a couple of days, 2 or 3 days, and then started pushing higher again. Pound US, so we've got UK rates on Thursday. I'm looking to sell this on just a slightly higher level. Not sure I'm going to get it, but 152, 152.50, at which point I would then look for that to roll over. Pound yen. Big box play in pound yen. So we breached it, ran up in early November, mid-November. Spent a couple of weeks down here in this box. Closed above it at the moment. It's not clear, but overall I am still bullish on this, and I still would look to buy. The fact we're above all the moving averages, and we're coming out of the box, I would buy 185.70 area. lower if I can get it, and then just see if we can at least retest 188 and test that sell bar up there. Euro yen crashed into the 200 MA. I think we may drift lower and then at least retest those highs. So we may see a lower push into 13250. But every time you get stuck between moving averages like that, it is harder to call. Right, well now we have New Zealand rates. Let's go to the Aussie New Zealand. So Aussie saw some weakness on Friday, back at the second half last week. I would just look to see if we can dip a little lower and get bought at 108, because I think the New Zealanders will reduce their rates. This is a nice push to the upside, so we've had a nice set of waves to the upside. So I had 1, 2, 3, this is 4. I'm looking for this to potentially dip down here and then for 5 to come into 112. So keeping an eye on that. The monthly pivot is down there at 850, not far below there. So let's just see if we drift under 850, potentially down to 800, somewhere between 800 and 850. And I'd look to see if I can pick up a buy signal down there and then push that into 112. What else was I looking at? Look at pound New Zealand. Now, let me declutter this and see if I can make more sense of what may be about to happen. Yeah, so we just tested the 50% under there. Yeah, we had a big, decent push up here. So we've had 1, 2, 3. Same story. I would look to see if we can come down. RSI is low. I would look to see if we can just dip a little further, get a buy signal around this 223, and then start to see if we can push higher on the pound New Zealand. Last look at euro pound. That is a reversal bar under the 50%. So I would look to get short around about the 72.25 area to see if this can start to roll over and pull back. But I'm not going to be in a hurry for that. Right, gold and oil quickly. Gold, big push. So that, but huge amount of support at 1077. Looks if we want to come and test 1100. Oil. If we close above 42, I'd be a buyer. Otherwise, it looks as if we are. The more likely path is lower, and I think we may want to come and test 38. At which point, I'd look to see if that can throw in a buy signal. But it's clearly in a downtrend. The highs are selling. I certainly would not entertain the idea of buying at this stage. So short any highs. 43.70 is a major area of resistance, and that may well do it. Right, what I'm going to do now is switch over to stocks, and I'm going to give you a little insight about how the stock club works in Trade Easy Way, and then to find out if you're interested, then you may want to pursue this. Rolls-Royce is on a watch list, but I'd like a retest to 565. PayPal. I think PayPal is a buy. They recently split it off from eBay. So they're just sitting underneath that 50%. Well, I think this is a good chart pattern. And because we've got that trend line coming down there, we just closed above it. So what I'm looking at is I would like to buy, if I can get it, 35. I would have a stop under 33.80 and see if that can push higher on PayPal. Premier Oil, I'm not touching until I'm on a this is on my watch list. Oil's weak, so I just certainly don't want to start nibbling long on this if this is just going to roll over and there is no buy signal, so it's just on a watch list. Just looking to see what's going to happen with oil. I think the UK housing market is long overdue for correction. That's a sell signal up there on Howden's. And so I'm looking to see if I can get a move into about 530 to short that with a stop at 540. I think the UK housing market is going to get a last little splurge though with this change in the stamp duty. So this Foxtons is a potential buy at 177. Get your stop under 170. Don't risk much money on it, or at least manage your risk, I should say, and see where that goes. BP watch list. We've got a gap fill at 350. So I'm going to see if that can come down and close that gap, and then see where we are. Barclay Group. And now with a move like that, I would bracket the chart. I think it's going to move back to its mean. I think this has got overexcited. I'm going to nibble on a short at 35.50 and see if that can close the gap and come back to its mean. But I'm going to take a small position and see if it works. I'm not going to commit money that I'm over and above my normal risk levels, my risk parameters. Amgem, it's a big box play. So I think it's worth a buy at 158, but just be cautious because that could just so easily just roll over. This is a buy signal, new low, close above next day on ACAM. It's gap down. If you'd have bracketed the gap down, you would have done this. That's not what I wanted. You would have noted that it just came in contact with the low at 24th of August and rolled over. But I'm interested because this is such a big area for it. 56.40 is a massive area, and I just think that may well recover. Okay, I hope that helps, and see you at the next update.